Y'all, I have put together one of the best vocabulary lessons for cryptocurrency. This is how to speak crypto one on one from A to Z, all the key terms you need to know. Stay tuned. What's up, everybody? Welcome back to Urban FinTech at the G Spot Studios channel, where we try to make finance and technology sexy. I'm your girl, G. So when I first entered into this space of digital assets, I was like, what the heck does all this mean? The language was foreign to me. And so if I could have had someone just break down the basics, that would have been just huge. And so I'm hoping to do that for you today. Here we go. First up, you would need an address. An address is a string of characters that functions as a place where individuals can receive, store, or to also send cryptocurrency. Addresses come as public keys, and so they're a string of different numbers and letters that you would give to someone and say, hey, send me 20 bucks in Bitcoin. Here's my address. Easy, just like an email address. And next on our list is airdrop. This is a marketing campaign that refers to the expedited distribution of a cryptocurrency through a population of people. It can occur when a creator of a cryptocurrency provides its coin to low ranked traders or an existing community of members in order to build its use and its popularity. They can also be given away for free or in exchange for simple tasks like sharing news of a coin, owning another coin, for instance. This is what I am having experienced using Uphold and receiving Flare tokens periodically that are being airdropped to me because I have owned XRP. And airdrops are really nice because they're like a little gift that never stops giving. And next on our list is altcoin. And the altcoin are all cryptocurrencies that aren't Bitcoin. And in some cases that aren't Ether. But Ether essentially is an altcoin, which is an alternative coin to Bitcoin. These are the coins that are sort of underneath. And Bitcoin, again, is the mother. Okay, so altcoin, any other coin, sometimes Ether, sometimes not. And then you have the bag holders, honey. These are the investors that hold on to a losing cryptocurrency for an extended period of time. It doesn't matter if it's going up, if it's going down, honey, if it's crashing, they are holding on to dear life. And that is a term that we'll also get into, but that's coming up soon. And sometimes in this crypto world, you will have these different seasons. So the bear market is a season, honey. The bear market is when cryptocurrencies are falling and it is a good time to get in and buy, right? That is when they consider cryptocurrencies going on sale, and now is the time to enter and buy at the reduced rates. And I know you've heard this word before, Bitcoin maximalist. You'll hear it all the time. You'll see it in the YouTube chats, on Twitter, or X, formerly known as Twitter. He's a Bitcoin maximalist. She's a Bitcoin maxi, blah, blah, blah. And it just really means that it is a person who believes that Bitcoin is the only cryptocurrency of value. They are diehard fans. They are going hard in the paint for Bitcoin. There is no other. Bitcoin is the truth. It is the almighty. And then, of course, blockchain. This is what it's all about. Blockchain is a digital ledger of all verified transactions made on a particular cryptocurrency. And so you can see everything. It's immutable, meaning you can't change anything. Everything that's there is there. The money that was spent, sent, maintained, all in this ledger. Think of it as a huge Excel sheet that just never stops. It keeps going on and on and on and on. It can repair itself. It can maintain all the intricacies of any transaction that was ever had. And this brings us to blocks, which are a part of the blockchain. And each block carries a historical database of all the transactions conducted on a crypto until it becomes full. And then you need a new block, and so on and so forth. And these blocks are what builds the blockchain up. And then BTFD. Okay, this means buy the f***ing dip. This is used when a trader tells others to pick up a digital currency that has dropped in value. Pick it up, buy it, it is time, buy the f***ing dip. And I think right now we are on the brink of a bull market, and you'll hear bull a lot. It is a market condition where prices are rising, which is encouraging buying. It should be the opposite. When there is a bear market, that's when you should be buying because the prices are cheaper. But hey, people want to jump on the bandwagon because of other things that they're dealing with. And we'll talk about some of those keywords, FOMO, FUD, in just a moment. But think of it as in a bull market, the bulls charge. If you think of the animal of a bull, it runs, it goes full speed forward. That means money is taking off, crypto assets are pushing forward. In a bear market, it is when the prices are falling. And if you think about, again, the animal, a bear, it sleeps a lot. And so in the bear market, there's sleep, you're sleeping on stuff, it ain't too much going on. It's just kind of in a state of hibernation. So that is my way. Yeah. dApps are short for decentralized apps, meaning any practical application of blockchain and or a cryptocurrency. So it's a decentralized application. It's not in the formal sense of an application, and thus it makes it a little bit more easier to onboard and to use. And then we have the diamond handers, right? Diamond hands, so and so has diamond hands, I'm diamond handing this bag. It is a term used to describe an investor who holds on to an investment despite the market volatility or the negative news. It doesn't matter what's happening, they are holding on to that asset. They're diamond handing it, they're all in on it, they're convinced that this is what it is. Even if it fails, they feel good about it because mentally they have prepared themselves to deal with the volatility of this particular asset. Fiat is a term that I'm sure you all have been aware of, but we just threw it in here just for the sake of our conversation. And it is a term for a government issued currency like the United States dollar or the Japanese yen. Easy. So lately, there have been a lot of people who have been FOMOing into the cryptocurrency market. FOMO, FOMO, means the fear of missing out. It is an acronym, which is a feeling of anxiety or regret that comes after you believe others are making money on an investment and you are not. You simply are in fear, and so sometimes you make rash decisions based on this fear, which isn't the best way to start investing. So never FOMO into a digital asset or into any investment for that matter. And then you have the FUDers, right? FUD, FUD, fear, uncertainty, and doubt. That is strictly what it means. It is one of those things where people are fearful of what it is that's going on, if the market is going to crash, is this a viable investment? I'm not sure if I should invest in this. I probably shouldn't have put that much money in that coin last year because now I don't know. And I have felt this. It happens. It's just a part of the game. But you have to really do your research and be bought into any of the projects that you decide to invest in because you want to feel 100% secure mostly about what it is that you're putting your money into. And then you have a fork, which is when a cryptocurrency or a blockchain based network splits off into two distinct projects with their own code and their own set of governing principles. And so think about Ethereum. They had sort of the Ethereum 1. They have this new Ethereum where you can have the staking, proof of stake rather, and then Luna. Right, you got Luna Classic, and then now you have the new Luna token. I don't know what it's called, Luna 2 or what have you. But there is a fork in the road, and so those currencies kind of split up, cutting them into two projects, but they're still kind of one of the same, but now they have two different kind of coding standards that they operate under. And the gas fees, honey, gas. You will hear it all the time, especially on the Ethereum network. The gas fees are outrageous. These are the fees paid by users to execute transactions on the Ethereum blockchain. Outrageous prices, honey. You think the regular gasoline that we fill our cars up with is no, 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 nope. And a halving. This is the process by which the reward for mining new blocks is cut in half, which occurs every 210,000 blocks in Bitcoin. And so we are approaching another halving within the Bitcoin world. And a halving occurs when they reward people for mining Bitcoin transactions, and it is cut into half, which also cuts in half its inflation roll and on the rate of the new Bitcoins entering into circulation on the market space. And so this is done to create scarcity and to create deflation of the token. And so again, we're approaching a Bitcoin halving. We'll see that the market should, in my opinion, start to do a little bit better, because then there is again less on the market, and those circulation of coins then have greater value. A hash rate, it is the computational power used to mine new blocks on a blockchain network. And so often you'll see hash rate SHA-256 is sort of a rate of a hash. And so this is how they operate on the back end. Again, above my pay grade, above my head. HODL, honey. HODL. It is a misspelling of hold that was once on a social media platform, but it has later become a slang term that means holding on to a cryptocurrency instead of selling them. So it just means holding on for dear life. An ICO is an initial coin offering, which is a fundraising method used by blockchain networks that help startups to raise capital for their new projects. And so a lot of times the initial coin offering is given to a selected number of investors. They get it at a certain price, and then once the coin kind of becomes mainstream on the market space, those people have had a head start in the race of crypto investment. And mining is the process by which new blocks are added to a blockchain network through a computational power. Mooning, not to be confused with pulling the pants down, honey, and showing your flapjack. It is a term used to describe a cryptocurrency or stock that is experiencing a rapid increase in price. And so you'll hear, oh, that cryptocurrency is mooning today, or so-and-so to the moon, because they want that coin to go up in value, go up in price. And a node is a computer connected to a blockchain network that helps validate transactions and maintain the network's security. So you'll often hear about the different nodes, and the miners are working on these different nodes and such. And so this again is the back end, again above my pay grade, over my head, but in its basic form, I guess I understand it in sort of layman's terms, but that's about as deep as we can go. A private key is a secret code that allows users to access their cryptocurrency holdings. It is similar to the address that we talked about, but the address is more of a public facing key. So it is a public key, and then you have a private key, which only you should have access to. Only you should know where it's stored. It is yours, your secret. This is giving anyone access to your cryptocurrency or your digital investments. And so you want to hold on to that private key. And again, public key is a code that allows users to receive cryptocurrency from others. And it is interchangeable. Sometimes it is your address, it is your public key, but it again is something that you can share with another person who wants to send you a digital asset over to your direct wallet or to your currency exchange account. Pump and dump. This is a scheme where investors artificially inflate the price of a stock or a cryptocurrency by spreading false information. Then they sell their shares once the price has risen. This is something that we've seen all too often in the stock market. This is something that we've seen recently with the FTX collapse. They did this with one of the tokens, ICP, or Internet Computer, which is a great asset in my opinion, but they did have a hand in inflating that price up so high, and then once people got into it, it just fell because they sold. And everyone that fell for the pump and dump scheme got wrecked. Wrecked is a slang term used to describe a significant financial loss in the investment world. And so spelt differently, REKT, wrecked, is when you have suffered a substantial loss. A rug pull is a scam where a cryptocurrency or an NFT hypes a project to attract investors. Once you get in there, that money only suddenly seems to disappear because these scam artists suddenly shut down or they disappear, and they take the investors' money and assets with them. They have pulled the rug from under you, honey. Money gone, disappear, poof. A Satoshi, the smallest unit of a Bitcoin named after the pseudonymous creator Satoshi Nakamoto. Shilling. They are shilling this cryptocurrency. They are shilling that token, honey. I thought this was a European word and I was like, what does this really mean? But apparently it's a part of the cryptocurrency investment vocabulary. Shilling refers to the act of promoting a particular cryptocurrency or project in a biased and deceptive manner. It involves artificially driving up the price and the popularity of a said token by creating an illusion of genuine interest and genuine demand, right? So they're just BSing, right? That's all shilling means, BS. They're BSing me, they're shilling me. Same thing. Smart contracts. This is what it's all about, baby. Smart contracts are self executing contracts with the terms of the agreement between buyer and seller directly written into the lines of code. And so you don't need to sign an agreement. You don't need to click the button, I agree to the term, blah, blah. It's written into the code already. So just by using the particular contract, that will automatically opt you into whatever those features are, whatever the terms are of that agreement that is written already within the code. A stablecoin is a type of cryptocurrency that is designed to maintain a stable value relative to another asset, such as the US dollar or gold. And so it is, in some regards, backed by some other kind of commodity in some sense, although the US dollar isn't, but you know. But with the stablecoin, it is one of those things where it is more deflationary, and so you won't see a bunch of volatility within this coin. It is fairly new. I'm not sure how they will be introduced or used into the market fully, but there are some cryptocurrencies that I imagine will become stable coins at a very high market rate. And again, stable, but just at a higher, you know, market rate than what we're used to. And to the moon, this is a phrase used to describe an investment that is expected to experience significant growth or that you believe will skyrocket pretty much to the moon and have value. And a token is a digital asset created on top of a blockchain network that represents ownership of a particular asset or utility in an application. Transaction fee. This is a fee that is paid by users to execute transactions on a blockchain network. It is pretty much also associated with gas fees. And so think Ethereum, they're astronomical, donkeyfied fees. And your wallet is a software or a hardware used to store your private keys and manage your cryptocurrency holdings. And so you can have a wallet that is a hot wallet, you have a cold wallet, meaning that it's offline. It's like a little ledger that you keep to yourself. You hold the keys, you control that whole thing. Or you can kind of be on an exchange that has a wallet or on an application that has a wallet and use it in that sense. And so that it's online. Some people will argue a little bit more riskier, and that when you control your keys, you control your crypto. However, I'm not sure how much the people can really control their keys because the company that they're buying these cold wallets from still have access, and from what I understand and how it works, to these keys of these individuals. And then you have the whales, baby. The whales. A whale is an investor who holds a large amount of a particular cryptocurrency or a particular stock and has the ability to influence its price. So you'll hear, oh, this whale moved $1.2 million of so-and-so token to this, to that. And then that really has an effect on the market because they hold such a huge chunk that it is a large percentage of the entire holding, and therefore any market moves can affect the overall market of a particular investment. And lastly, YOLO, honey. Yeah, you only live once. Why not go for it? Which is a term that is used as an investor who takes on high risk investments. Could have fooled me. I thought it was a term that we just kind of got together from social media and was like, you live your best life. But apparently, it is a term that we use in the investment world as well. And so, that is your quick snapshot of vocabulary, cryptocurrency 101. Let me know in the comments any other terms that I have forgotten or any new ones that you've created, because we want to bring it all together, baby. This is a language, honey, and we're learning it. See you next time.